this. So this is recorded. Welcome, guys. It's November 2nd. This is going to be a free webinar for you guys. Will be uploaded to YouTube afterwards, so you guys can go back and check. It's completely free. So a couple days ago, last Friday, I believe, I posted in the chat, just trying to gauge your guys' interest on doing a webinar. Let me just find it real quick. So we did a little poll. We wanted you guys to vote on what topics that you wanted us to cover, what you guys are struggling with. And the main things that you wanted to cover were entries, market structure. What else? 14, back testing was a big one. And we also ran this in the Telegram as well. So I'll pull that one up. So we ran this in the Telegram as well. And this was our results right here. So we had entries, market structure, Fibonacci was a big one here, and back testing. So that's going to be the 4 topics that we cover on this. So that's what we're going to go over. Throughout the session, if you guys have questions, just post in the chat. This session is completely for you guys. It's completely free. And yeah, so pretty much I'll take, what do you want to take? We got market structure, entries.
Well, you honestly could do a session about one for each. I mean, like there's so much entries alone.
There's a lot to go over.
Let's start off with entries though. Let's just do entry.
Let's start with market structure first. We'll start with market structure first, and then we could get into you can get in entries. Do you want to do market structure or what?
It doesn't matter to me. I mean, I consider them the same.
I'll start off with it before you start.
Like entries are great going into right from market structure. It's good going into entries.
Yeah, then we could look over some back testing. We'll talk about all the we'll talk a little bit about all the topics, guys. I know some people asked about FTMO, trade entry, market structure, then entries. Market structure is king. Yeah, so that's gonna be a good one to start off with. Just gonna pop over here, and I'm just gonna pull up fresh charts. Pull this up. Trade entry, end of trends. All right, cool. Kanye, Trump or Biden. Dude, I mean, I'll say this. I just want there to be peace in the country. So that's my answer to Trump or Biden.
Well said. Spoken like a true politician.
Spoken from the heart. But I think the deciding factor will definitely be all these people that have never voted before. It's gonna be a big swing. But those people need to be in states that matter. You can't just have a billion people voting in New York. It's not going to swing the electoral vote.
So you want Kanye to win.
So you want Kanye to win. Yeah, I want Kanye to win. All right, so let me go on here. Let me pull up load chart. Let me pull up the backup chart, the back testing chart. And we'll do it based on this. What pair do you want to look at? Does it matter?
Hey, no, it doesn't matter. Wherever you see good structure, any USD pair is typically good.
USD. Yeah, let's go over. Let's do some majors. Let's look at GU. So we've got completely fresh chart on GU, and we're gonna start this off. I assume most of you guys are beginners. Most of you guys, are just kind of starting off. And even if you're not, this is just a good example to kind of run through. So we're going to start off, we're going to come down off of the actual chart, and we're just going to do a little diagram talking about lower lows, lower highs. So we are either in a downtrend, guys, or we're in an uptrend. When we're talking about market structure, the main thing that we got to focus on is what makes up a downtrend and what makes up an uptrend here. So we're just going to map out some market structure here. We've got downtrend going on right now. And feel free to chime in at all, Nick, if you want to.
Yep. Yeah, absolutely.
Right here. So guys, this is the main thing that you're looking for. You're looking for these lower low points, these lower high points. This is a trending market here. So, you know, if markets are in consolidation, which I'm not going to touch on this point, you know, it's going to be different trading them. It's going to be a different approach. When we're in a very clearly trending market, such as this one, we're making lower lows and lower highs. It's pretty clear as to where we should be taking entries and everything like that. But the first thing we're going to do is we're just going to label everything out.
This is a good exercise for you guys too. If you, when you go over to do this yourself, make sure you properly label things, you know, because the more you do it, the easier it'll, you know, become, and then you'll be able to identify things pretty much on the
start
fly.
off of the charts, like off of the candlestick charts, and what was the Sam, the only one FX, and yeah, you might be the only actual member here. Start off of the charts though. Like if you guys are just trying to learn just from nothing. So first of all, this is a downtrend here. And if we come to the right over here, and we're going to start from a very baseline perspective, and we'll get into some more advanced topics. So as long as these levels in a downtrend are being respected, then we continue to have a bearish momentum. As soon as this lower high is broken, right here, this is what we call a transition, guys. Transitioning from an uptrend or from a downtrend to an uptrend. So I'm going to put this at the bottom right here, downtrend to uptrends. Just keeping things as simple as possible, guys. No need to get confused. No need to overcomplicate things in here. And especially when you're struggling, it's good to just hop on and just map things out like this. So as soon as this lower high breaks, first thing that we're looking for, first opportunity that we're looking to enter on is always going to be this higher low. It's always going to be this first higher low point in the market. And then as you can see here, we form this new higher high, this higher low, then we form a new higher high here. So this is just very simply market structure. Market structure 101. We've got a downtrend here. We got a transition. Then we're moving from downtrend to an uptrend. So that should make sense. That should be very simple and everything like that. Now, let's get into how do we denote when we're forming lower lows and lower highs right here. When do we denote, like, okay, what is a lower high? What is a lower low? So I'm going to bring on, we're going to come down here. I'm going to draw another range. And I'm going to bring on this tool that you guys want to talk about as well. We've got the fibs. So this is going to be our fib retracement tool right here. We've got all these levels that we have marked. These are all the levels that me and Nick use. The main ones that we're looking at always is 38.2, 61.8 levels. These are the main levels of reversal. Guys, until we hit, let me draw it over here like this. So how we're going to use our fibs, how we're going to draw them is from previous lower highs. So we have this high point here to our new lower low. Boom, right here. This is at point A. Draw this out right here, and this is going to be our point B. And until we pull back and we at the least hit this 38.2, guys, a lower high does not form. So if price comes right here, it's very minor pullback. You know, this is not considered market structure. Market structure is when a significant level is made in the market, when a significant level of resistance is formed. So once this 38.2 is hit, we can consider that market structure. Say it comes up to 618, say it comes up to 786, 886, 100% level. All these levels are still going to be lower highs, lower high points. So that's mainly how we draw a market structure, is using our fibs. We don't have our moving averages on now. We're not going to get into that. But the main way that we're denoting market structure here is just using our fibs. So if we come on this whole entire area, again, you could just run through this. It's a very easy practice example run through. You could test and see, does this hit 38.2? Yes, it does. Once it breaks 0%, that is when we're going to move our fib. You're going to draw your next one from this lower high here to this lower low. We're pulling back. We're hitting this 38.2 again. So that's what denotes structure again. And then as it breaks 0%, we're moving it again. See how this one comes up, hits this 618 level, and then we move through 0% right there. And then once this finds support right here, that's when we draw our new fib. And then all of a sudden what happens here, we have a break of this 100% level. So until price comes up all the way past this 100% level, this previous lower high, guys, very simply, if it breaks this level, that's when the trend is changing. That's when we could see signs of reversal in the market. And this applies to every single time frame. So once this is broken, all you do is delete your fibs, and then we're going to mark this new trend. So normally when I do this example, I'll bring on like I'll white this out. Let me show you guys. And I'll just go like this. And so we can't see what's in the future. So basically, we just had that new higher high form. I'm going to bring this to the front here. So we're waiting until we get some sort of retest of at least that 38.2. As we can see here, once that 38.2 is retested right there, that's when that higher low forms. We just mark that out. And then we're waiting for that 0% to break. So we're not going to get into entries yet, but this is going to be, we can build right off of this into entries as well. So right here, we hit this 38.2, and we can keep moving this. Okay, the 0% level breaks right there. That's when this fib can be moved. And we're not looking to fib again until this market finds resistance. So up here, it finds resistance right at that point. That's when we'll do our next fib right there. And it's the same thing. We're just waiting for price to pull back. Right here, pulls back to around 50% level. The main levels, guys, on the fibs that we're looking for, though, is 38.2 and 61.8. 38.2 and 61.8 are the golden levels. That's why I have them marked in this color right here. Those are the main levels that we're looking for reversals off of. 38.2, market will reverse very aggressively off of that level. So if we see reversals at 38.2, market's going to move aggressively. And then the 618, you could look and see the market would normally push up, pull back, push up. So any of these lower levels, if we start to retrace to, we got to be mindful. Price isn't going to just shoot up, you know, in an actual market. It's going to start to trend on the lower time frames. It's going to have little dips. But as long as you identify what your structure is overall, like on the higher time frames, that's what me and Nick do. You can get into that a little bit more. But as long as you identify what your trend actually is on the higher time frames, then you could always stick to it. Even in a market that's as sloppy as the one that we're in right now, it's just critically important to understand what your bias actually is. So this is an example you guys can run through just on your own. If you want to test yourselves on like what is the market structure doing, just draw downtrends to an uptrend right here, and then pretty much what I would do next, before we actually get on the charts at all, is I would just start to map out where are we looking for potential entries. So in the downtrends, we're always looking for entries on lower highs. How can the first for the reverse? And yeah, if you guys have any questions, just write in the chat. Nick's standing by; he's answering some of them in there, and we can cover some of them at the end as well.
Yeah, absolutely.
So I'm just gonna mark out. Right here. So all these lower high points, these are where we're looking for potential entries.
For shorts. If in a bearish trend, you know, we're only looking to short on lower highs. In a bullish trend, we're looking to buy only on higher lows. What is, so LH is lower high, LL is lower low.
Right here.
How can the first fib retracement being reversed at 38? Well, those are the two levels that we look for. We call them our golden levels. So when Angelo draws a fib, you know, it's highlighted in gold or yellow. Those are the two levels where we see the most aggressive reversal, where we're able to get a higher probability trade and then see a good amount of movement after that. So 38.2, 61.8. Those are the two preferred levels that we like to enter at.
Yep. So right here, guys, we're just going over an example. We're on the H4 time frame right now. Like Nick said, we've got marked out lower highs and lower lows, higher highs and higher lows. The lower highs in the downtrend are where we're trying to enter in on short opportunities, and this is where we're trying to enter in on buy opportunities. Right here is going to be a break of structure. So I'm just going to mark this out right there. And we'll just put break of structure. So this is the point at which the market is reversing. So this is the transition right here. This is a transition from a downtrend to an uptrend, and we're on the 4-hour time frame. So as this is transitioning on the 4-hour time frame, we have all of these little mini transitions going on here. If we pull out right here, we'll focus in on this one right here. So right here we have a 4-hour push to the downside, pull back. We're within this Fibonacci level. We hit the 38.2 like we just showed you guys. Now what's happening over here on a lower time frame? So we're gonna draw this out. Say we're on the M30 or the 30-minute time frame. And what we'll normally do, guys, is if we're on the 4-hour, we'll bump down to the 30-minute or the 1-hour time frame. And those are the time frames that we're going to start to look for entries. You know, we're going to start to look at lower time frame structure to validate whether our setups are ready to go or not. So right here, we're just breaking down this lower high point. What is going down on the lower time frame here? So on the lower time frame, as you can see, we're in a push to the upside here from this lower low. We were pushing up. So this is a lower time frame uptrend. Just going to delete this. So on the lower time frame, we're making higher lows and higher highs right there. And then we have a little break to the downside. We're just going to move all this over a little bit. And this is going to be the same thing on a lower time frame. This is just a transition. We've got the market forming uptrend structure right there. And where we're going to look to enter on this lower time frame is going to be on that lower high point. So this is just breaking down. This is the 4-hour time frame, breaking this down to, this could be the 1-hour or the 30-minute right there. So that could be the 1-hour or the 30-minute. This would be where your first opportunity to enter would be. And we'll get on the charts in a second and do another example of this. But this would be where your entry opportunity would be. So I'm just going to label that out right here. And again, guys, this is recorded. So if you want to review this afterwards, you guys will be able to, it'll be on YouTube. So this would be where our entry would be right here. Boom. So this is a downtrend. This is where we would look to take a short. So label this.
And that's how you confirm the lower high too. When you start seeing these confirmations, these bearish, variations or confirmations, lower time frame breaks of that higher low, then you see it where he highlighted his short entry. That's what you want to see to confirm this lower high, and then you can comfortably take that trade and have it be a high probability one. Good risk reward is there. He's targeting towards a new low. He's riding the trend. Everything is kind of like very methodical.
So basically it's support and resistance. Yeah, exactly. Support and resistance. So this is what we're seeing, guys, on the 30-minute, 1-hour time frame. Now, what are we seeing on the 4-hour time frame? Oh, we got somebody unmuted. So what are we seeing on the 4-hour time frame? This is just going to be a candlestick variation. We're going to have a bullish candle come into this resistance level, and that's going to be followed by this bearish candle, and I mark my bullish candles as this color. All right, so right here, as we're moving up into this level, we have this lower high drawn right there. And actually bring this down here. It's getting a little crazy. I'll fix that up later. All right, so as we're coming down up into this level, what happens? We have buyers that are in control. We have a buying candle in the 4-hour time frame. Then we have a bearish engulfing. So this is what we're looking for on the 4-hour time frame right here. We're looking for some sort of bearish variation, whether it's an engulfing. Let me draw this out. An engulfing Evening star, any other bearish variation right here. Now, this is what's going to break down once so we're not going to go too in depth on confirmations in this session, but basically once we get up to this level, and if we have our fibs placed on here, and all of a sudden we have 38.2, and then we have a bearish engulfing evening star, any sort of bearish variation on here, that's going to be 2 confirmations. So that's 2 confirmations for us. Rule of thumb is kind of have like 2 or 3 confirmations before you guys are even bumping down to a time frame where you would potentially take entries on. So we have 2 confirmations here. That's why we're bumping down to the lower time frame. Again, this is just hypothetical. We have our fibs, and we also have our bearish engulfing candle. We bump down on a lower time frame. This is what a bearish engulfing breaks down into, guys. So this is an uptrend. Bullish structure breaks into a downtrend. And then you would be looking to enter somewhere in this area, normally on the following candle. No retest, no entry, guys. So once it retests and it pulls back, that's on the lower time frame where we're going to look for entries on that. And we'll go over again in a second when we get on the actual charts, what that looks like. Now, hopping over to the other side. So this transition from a downtrend to an uptrend, this happens on every single time frame. We just modeled that on the 30-minute, on the 1 hour, 4 hour time frame. This is where our main structure is, what we're focusing on. So let's now look at this uptrend. So as this breaks structure on this time frame and it pulls back, forms this first higher low right here. We can fib this out, hits that 38.2 level. First thing we're looking for is going to be multiple confirmations. So we're going to take this and we're just going to flip it around. So here we're actually hitting a level of support. And this guy over here, and this guy over here. So we've got our bearish candle, which is going to make this a little bit smaller. And we've got our bullish candle. So this is going to be the same thing that we're looking for. Engulfing, instead it's going to be a morning star and any sort of bullish variation. That's what we're looking for to form at this 38.2 level or any of these Fibonacci levels, any of these retracement levels right here. I'm just going to move this around. All right, cool. So once this does form, we have our 38.2, we have our bullish engulfing. That's when we're going to come down to the lower time frame again. And we're going to look and see on the lower time frame, is this an actual valid transition? So here we're in a downtrend. We're pushing lower on the 30-minute. So I'm going to map that out. This is going to be 30-minute structure like so. And then that bullish engulfing happens. It closes and confirms. And then this is when we're going to break into an uptrend right here. We're going to highlight. This is going to be where potential entries would be. Boom.
Dude, this like belongs in a textbook or something.
Yeah.
So the way this graph is looking here.
Yes, this is a textbook right here. So again, this is going to be H1 30-minute time frame right here. We don't like to go down to like the 15-minute. We don't want to get too confused. Don't want to be focusing on the lower time frame too much, guys. We want to keep ourselves on time frame that actually means something. So H1 30-minute, that's when we're going to look for a long opportunity. So looks very similar. This is 4-hour time frame in a downtrend, forming lower lows and lower highs. To reiterate, then we break of structure right here. Once we break that lower high, and then we form. Where are we waiting to enter on? We're always waiting to enter on the first higher low. What makes up a higher low, guys? It has to hit a fib level. It has to form some sort of bullish variation, engulfing, morning star, any bullish variation. That's when we'll hit the lower time frame, and then the lower time frame is really when this is all going down. So lower time frame is where we can clearly identify, is it an actual break of structure, and then we'll look for our first entry opportunity. So this is our first little example that we went through. Again, this is just keeping it very simple, very simple. We're not even bringing on different confirmations. We're not bringing on trend lines, supply and demands. We're not bringing on anything like that right now. I'm just going to title this market structure. But this is still, you know, this is the basis of a strategy that trades the trends. First of all, you need to have rules in place to identify what the trend actually is for you guys. Here we're using our fibs, and we're also using our moving averages, but in this example, we're not using that. So here we're using our fibs, and we're also using our candlestick patterns. So if you guys don't know your candlestick patterns, you got to learn them. You know, you got to memorize them. You got to be like the back of your hand. You got to be able to recognize them whenever you see them. So first example here on market structure. Any questions? Any questions? Feel free to post in the chat. Can you please take a look at ADNZD? Tell me whether you consider a break of a trend or no. 1 hour. So we're not like on here trying to give signals or trade right now, but I feel you. Drop a chart link. This guy, drop a chart link.
Drop it.
Market structure, the trends.
True.
I believe we just described it pretty well.
Well, I think he means like it's the true trend. Like the market, no market is just gonna rocket in one direction. That's not normal. Like you need to see waves essentially. You need to see the market make a push, take a breather, take a push, take a breather, or make a push, take a breather. These breathers are these pullbacks essentially, you know, where we're looking for the structure formation is just the true, you know, wave of the trend essentially. That's what we're looking for. So anything below 38.2 we wouldn't consider a true pullback or a true lower high if it's in a downtrend. So it's just the true trend essentially is what, you know, market structure I guess would be.
Yeah. So that's just a little lesson. We got a market structure. What I want to do next is I want to hop on into an actual chart. We're going to hop on with the candlesticks. How do you know that good pullback is true? So that's a good question. How would you know that the fib pullback is true?
Well, I would say this over here where you have your entry.
Yeah, exactly. So we're not just looking for, like, if it hits 38.2, guys, that doesn't mean you enter. I see a lot of people doing that where it's like hits 38.2 and then they're like entering, or they'll set like sell limits at 38.2, like, or buy limits at 38.2, whatever. You guys, it's made up. You need to have multiple things, multiple reasons as to why you're entering. It has to be based on it's a level of support. You know, me and Nick use the key levels on the monthly and the weekly time frames. And then we use our random line as we drew in here. You know, we use our random line to mark previous levels of resistance, then turn support. When you have levels marked on your chart, that's one confirmation. When you're using your fibs, that's one confirmation. When you're using your candlesticks, that's one confirmation. When you're using supply and demands, that's another confirmation. When you're using moving averages, that's another confirmation. That's the only indicator that we personally use. So it's not just like the fib, the pullback is only true when it's in confluence with other reasons, when there's other reasons to enter as well. So just use the fibs to mark down market structure, but you need to have other confluences when you're trading as well.
All right, so you want to know whether it's a false break or a new high. Depends on the time frame you're looking at it. Let's take a look.
What's the best way to scalp it?
Let's take a look. On the 4 hour, I mean, it did give a transition through the MAs. It would need a full analysis, but I mean.
All right, let's go now actually onto the chart. We're gonna hit the 4 hour time frame, and we're gonna do a similar example as to what we just did right now. We're gonna focus on this entire leg of the market right here. And we're gonna do the same thing. So what I'll normally do, guys, is, or what I recommend for you guys to do once you get to the point where you want to start to actually break down the charts, is the same thing that we just did. Look at the candlesticks right here. Look at the way that the market is trending. You could even, we'll take off our moving averages for now. My computer is so slow. We'll take off our moving averages for now, and we're just going to go ahead and we're just going to trace this trend. So we have this pullback, comes up here, We're going to trace all of this. And then we're going to run through a very similar example that we just did, except this time it's going to be on the live market. And then we're going to hop on, look for potential areas where we could have entered on, and all that good stuff. And again, this is something that we advise all of our students to do when they're actually learning. It's just very easy to break things down like this. So I mapped out, that is the actual chart that we just mapped out. Now we're going to hide this, and we're going to run through the same example that we just did. You know, it's not as clean, so I'm just going to clean this up a little bit, but it's going to show you this concept that we just took on the lower time frame, guys, is going to be the same one that we run through on the actual charts. And this is what we're going to use to actually denote what's going on. So we're going to start off right here. We're going to start off with our fibs from this low point right here. We're going to draw it to this high point right now. And we're going to talk about, is this market structure right here on this 4-hour time frame? Remember last time we talked about 38.2 has to hit that level, or it has to come damn near close to 38.2 to denote as market structure. If we came back on, if we brought the candlesticks back on, I'm sure there's a wick down here or whatever. But basically what we're looking at right now is we're looking at our first pullback. And like we were just doing, we're going to denote this as our first higher low. So I'm just going to bring this back on as white. We'll make this a little bit bigger. Bring it up 20 right there. So we've got our first higher low point right there. And we've got our high point right here. So we're clearly in an uptrend right now. Now we're not going to move our fibs. We're not going to move our fibs until this 0% level is broken. So we can use our random line. We can line this off and we can tell ourselves right now, until this higher low is broken, we are clearly in an uptrend. We're only looking for buys. We're looking for this thing to continue to push higher unless this higher low is broken. So then we come up, we test 0% level, we form this high point right here. So we don't actually make a new higher high. We just form a high point right there. So I'm going to label that as high point. Then we come down, we form this next higher low point in the market. Now, this is where a lot of people get confused. Since this doesn't pull back all the way down to this 38.2 level or retest this previous level, we are not going to consider this a significant level of structure. This is minor. Yes, this is a point in the market that's higher than the previous point, but this is not a level of structure. This level is more significant. This pullback was a deeper pullback. And in terms of thinking logically, why is this level more significant? Sellers stepped in, took control right here. If we were going over the moving averages, which we're not on this session, we'll get into this a little bit more, but sellers stepped in, took control in a buyer's market, pushed this thing all the way down. And then this is the point at which buyers step back into control at this deeper level, at this deeper price point. This is why this becomes significant. Within this fib, this is very minor. We used to have our 23.6 area up here that just denotes continuation. But I removed it. So this is not going to be a higher low point. So until this level is broken, we are going to be in an uptrend. As we can see here, we break this 0% level. And then this is when we're going to move our fibs. And I can even do just like we did last time. I'm going to bring on this sheet right here and change this to white so we don't have to cheat ourselves. No cheating, guys. Got to stay honest, especially on your back tests. All right, so we make this new higher high right here. Then we pull back all the way to this 78.6 level right there. And then as I bring this white thing across, this white box, we're starting to see more price action form. We come up, retest the 0% level again. So as you can see in the live market, it's not always pretty. It's not always going to just react from this 61.8 level or the 78.6 level and shoot up to this negative 618, negative 27. It's gonna trend, it's gonna consolidate, it's gonna move within this area, but we just have to make sure that we have real rules as to what we're marking down as market structure. So as you can see right here, we have this next higher low point forms. Then we can bring this across. All of a sudden, we retest that level again. So I'm just gonna label this as a low point. And when I was starting off with trading, this is what I would do over and over and over again. Noir, you have a good night's sleep, bro. Thanks for hopping on this session. I don't know what time it is for you guys. Drop in the chat what time it is, where you guys are at, so we can gauge what if this is like a good time to actually be doing these meetings. You want to see where you guys are calling in from? No problem, no problem. We'll just switch the lines. Yeah, I mean, we could actually just switch the line chart, honestly, but it is better just to do it like this because I'm more worried about the candlesticks. The line chart is kind of a little bit shorter because it doesn't account for the wicks and everything. So that's why I kind of just like to draw it out like this. So we got these times on here. Right there. All right, cool. All right, so let's continue with this. So we just formed this higher high, this high point. Again, we're not moving the fibs until we break 0%. So let's come on right here, continue moving this across. Okay, all of a sudden we break the 0% level. What we're targeting now, guys, just talking about projections real quick, we would target the negative 27 and the negative 618. So those are the two levels that we'd be targeting as we're moving into towards or beyond our 0% level right there. And then as we could see, we form this new high, so we can delete this fib right here. This new higher high point up there. And then we have our new higher low point. So until this level is broken, we are in an uptrend. Until this level is broken right here, we're in an uptrend. And we can fib from this higher low to this higher high. We're fibbing from this level, guys, not to be confused. This is our higher low point. This is where we're fibbing from. Right there. Dude, it's getting toasty in the office. I turn on the heat.
Yeah, it gets heated quick in there. What'd you put it up to?
I just put it on like 70.
Yeah, it gets pretty hot.
Toasty in here. All right, so let's continue. Drag this little white box across. So until we break this higher low, guys, we're looking for buys. As you can see, price never finds support. Price continues lower and lower. This is our break of structure. So I want to mark this off just like we did in our example down here. And just drag this. Boom. So this is going to be our break of structure right here. So this is when we're going from uptrends to a downtrend. Again, guys, we're trying to keep it as simple as possible. There's no need to overcomplicate things when we're talking about market structure. So here we have an uptrend. And then as we can see in a second over here, we're going to have a downtrend. Boom. So this 100% level breaks right here. This is when we're going to flip our fibs. We're going to wait until we find that level of support. So we find that level of support down here. So we're going to draw our fibs. In a transition, we're going to draw it from our previous higher high point to our new lower low point. So we have our new lower low down here. And then we aren't going to look for sells until we get to our confluence level. So first confluence level is going to be this 38.2. We've also got this resistance level. We do have this previous resistance level right here as well. So those are all things that we're considering as we're trying to enter into the market. As you can see, price comes up, damn near close to this 38.2 level, find some rejection there. So we're going to mark this out. Lower high point right there. And another note, guys, is there's no right and wrong way to decipher what's going on in the market. There's a million ways to trade, to draw, use technical analysis. The key is that you have to have a concrete plan, a concrete way that you mark down market structure. It has to be tested and proven to yourself that it works. It has an edge. And then you just apply that onto your charts. Like there's no, if someone shows you their chart, what they're doing is right, opposed to what you're doing is like, there's no right and wrong. It's just that you're implementing a plan, a trading plan. You're testing that trading plan to make sure that it has some sort of edge in the market. And then you're applying that over and over and over again to different situations. Now, not every situation is going to line up directly with the entries that you've taken before. Market structure, it might not make sense. You know, right now the market's very volatile with everything going on. Market structure is all over the place, and that's okay. That's okay. You got to be patient. Just like a little tidbit, some psychology. You got to be patient. You got to wait for what you're sending out for. You know, don't try to jump in on things that aren't clear, that don't make sense. And the reason why I say that is because in a second we're about to bump down to lower time frames. We're going to look at the actual charts, just like we did in this previous example, and we're going to look at some entries here. So right here, we just marked out, we had this lower high form. Let's just finish this up real quick. We form, make this new lower low right there. So that's when we can delete these fibs. We can refib right here. I'm going to use my random line because now we're looking to respect this level. Let's drag this across. We come all the way up to around this 88.6 level. And then this is when we form our next lower high point right there. And then the market gets pretty crazy. And this is going to happen from time to time. We're coming across until this 0% level is broken. We don't move our fibs. Until this 88.6 level is broken, we don't move our fibs. And as you can see right here, this 88.6 level ends up breaking. We form it's a new higher high point, not compared to this, not compared to this. It's just compared to this. This is market structure right here. It's just compared to this. Bring this over. And then, and as you can actually see here, before this even broke, what happened? We formed this higher low. So this uptrend structure started to form. So this is when we start to go into a little bit of an uptrend here. So this is, again, a break of structure, so we can mark that out. Right here. Boom, we can mark that out. So again, this is a break of structure right here. Going into an uptrend, this is when we can take our fibs back. Right here. And the same thing that we've been doing, we're looking for our first higher low point, hit this 78.6 level. Right there, that's when we form our next higher low point. And then we push, we break 0% right here. And this is when we're pushing to a new higher high. So let's drag this across right here. Boom. So we got all this going on. We're going to end off right there, form some more higher low points right there. We're going to take this fib off, and we're just going to sit back. We're going to admire what we just did, because realistically, what we just did is we just mapped out. This was a live market that we just went over. We implemented how we're going to think about market structure with our higher highs and higher lows. We mapped out everything using the fib, just denoting where things lined up using our 38.2 or 618, like we just went over. Now, the next step here, guys, would be to break this down one step further. break down all these entries like we just did in our example with the line chart, but it looks like we're running out of some time here. We're running out of time. So it's around 6:50. We hopped on at what, 6?
Yep.
6.
50
So
minutes.
we're gonna have to expand this into another live session right here. I'm gonna actually leave these examples and we're gonna run through this again. But this is obviously, you know, I hope this guys helps you out a little bit when it comes to market structure. There's a ton to go over. Me and Nick could spend fucking hours on this topic alone.
Can't even tell
And
you.
if you go onto the live chart, like there's so many examples that you can kind of run through, and we're gonna run through that in a future webinar. We're gonna run through that another live webinar for you guys. Are you guys at TST again?
For EST.
Actually. So let's finish it off. If you guys have any questions, feel free to put it into the chat. Let's finish it off with any questions that you guys have. So we did go over market structure pretty in depth. We got into entries a little bit.
Yeah, so this will also be on YouTube, guys. I mean, rewatch it. You know, you can watch as many times as you want. Maybe take notes. Maybe have your chart next to it, doing something similar. Just making sure that all the steps are right. Because yeah, I mean, there's a lot of value in this. There was a lot covered. We covered structure and entries, you know, and great detail. Thanks to Angelo. So yeah, definitely refer back to this.
Yeah, so we're gonna build off this session for now. I think we can end it off maybe with one little lesson on like risk management. We could end it off with that. What do you think? Unless you guys have any questions. If you guys have any questions, you've got like 45 people in here. If there's any questions, throw it in the chat. I am gonna leave this example on here, and we can come back to it in a future session. I mean, I hope you guys learned something from this. We just went over.
Here's a good question. Can you say that's a good way to make structure backtesting? I would say absolutely. Do this when you're backtesting. I mean, the fibs part, at least, you know, labeling if you have to at first before, you know, you really get the hang of it and get into a groove. Definitely label things. Definitely mark the break of structure. Use fibs, you know, the way we just showed you. Yeah, absolutely.
Yeah, definitely. So this is like a beginner's example. The first one that we went over is a beginner's example, not even going on to the charts, guys. You know, just literally drawing out with the lines, drawing out where's the higher highs and higher lows using your fibs. Now, once we got on the actual charts, this is all building up to the point where you're back testing without having to do this. You know, this is all building up to the point where you're back testing without having to do this. But in the beginning, when you're trying to understand what's actually going on, this is going to be a great exercise to do. So the next step right now would be to come back on, bring on the candlesticks, and then highlight all these areas that were potential entry opportunities. And we would break these down and we would look and see where we could potentially enter based on our rules of going down to the 30-minute, to the 1 hour. And then we would do this over and over and over again for all these areas. And then that's when you can build up screenshots. You could build up a catalog of entries that you guys can then look at when you guys are in the live market. And we'll do that. We'll do that on a future session. We just want to cap this one for now. So that being said, if there's any last questions that you guys have, if you want to master backtesting by lifetime membership, Sanu is a great app. Yes, Sanu is a great app for lot size calculation. We really just covered one topic on this. We really just covered market structure.
Yep.
Yeah,
pretty much just market structure. The next step would be entries. Stinu, yes, Stinu is a great app. I'll mention our promo. There are 2 spots left technically.
Yeah, so we are doing a little bit of a promo right now, guys, for our lifetime membership, and everything that's included. I can pull up. I can find a little picture. Give me 1 second.
Yep.
Quality's so low. Let's see here. Okay.
Yeah, us too, Chris. Yeah, thank you. It should be good. Another session, another good session.
All right, so little blurry. I don't know why. So everything that's included in our lifetime membership is going to be 50 plus videos. We got videos on market structure, everything in between, going over all the different tools that we look at. I'll pull it up in a second, the actual course. Signals are going to be in there. We'll do one-on-ones with you guys if you'd like to. Our trading plans included in that. We didn't look at that right now. I'll pull it up in a second. We'll just look over it. The private chat, so you get included in all of our premium chats. Fundamentals. I saw someone today. We could talk about the election real quick before we hop off. Someone today asked if we could have a channel with fundamentals. We do already have that every single day. We're posting analysis based on fundamentals. And then we also have the live sessions, trading library, weekly webinar, and the positive community. So we try to do webinars like this for our members every single week, sometimes every other week. I'm just gonna stop sharing for a second just so I can pull up the actual course. Here. So yeah, we do webinars. I think the main thing, guys, when it comes to the course is we do the one-on-ones, and that comes down to you. If you want to schedule one-on-ones, the option is there for you guys. You got to hold yourselves accountable and take advantage. The way we do it is we just post a link that has a calendar in it. I'll show you guys in 1 second here. So I'm gonna go ahead, share up again. Boom. So this is going to be everything included inside of the course. Week 1 is just going to be a very brief overview for the beginners out there. Just some lessons on what Forex actually is, the hours to trade, some things that you can get on Baby Pips for free, but we don't like to focus too much on kind of the background. We just want to get right into the actual charts. Week 2 is going to focus on setting you up with your broker, setting up MT4, just giving you the ability to actually trade and TradingView. Everything we just went over was on TradingView, was on the actual TradingView charts. So we're going to teach you guys how to get that set up, and then we'll get into market structure, support and resistance, trend lines, Fibonacci, time frame correlation. Those are all the baseline things that you guys need to learn in order to have a strategy in the market and be able to trade. Then you guys will get some homework. Main purpose of the homework is just you guys need something to work on, very similar to what we just went over, so that when you do schedule your one-on-one, and I'll pull this one up, this one-on-one link right here, you can come in here, schedule one-on-one with us. I'm not going to actually pull it up because you guys can grab the link on there, but you could schedule one-on-one with us, and we'll have times available during the week where you guys can hop on. It's pretty flexible. So that way you guys can hop on and actually talk with me or Nick. Then you'll get into week 3, top-down analysis. We go over this almost every single day on our live sessions. Go over top-down analysis, identifying the trends, examples of entry zones, entries, index analysis. So that's DXY. A lot of you guys that are on the live sessions see Nick goes over DXY, just the value of the US dollar. Patterns, convergence 1.0. So this is just our whole strategy in a video, breaking things down fully. And then we've got our trading plan, which is about 30 plus pages right here. I won't go over anything inside, but I will show you guys the table of contents, and it also comes with a little video. Computer's just struggling right now. So we've got our trading plan. You could download it if you want to. It's a PDF. Everything that's in here is just going to be our strategy, what the rules are. We even suggest you print these out. We've got some at the office right now. We print these out. Goes over risk management, training assignments, candlestick analysis. All the patterns are in here. Market pattern guide. So people definitely love having this at we just say this is like your study guide. You guys should just put this on your desk. It alleviates a lot of the notes that you guys will have, because you could just study that. And then again, another one-on-one. Week 4 gets into risk management, maintaining orders, back testing, fundamentals, lot size calculation, all key topics. All topics that you guys need to trade, that you guys need to understand, that I've taken courses in the past. I learned from Instagram, realistically. Nick learned from YouTube and stuff.
They're just various places.
Yeah, I didn't learn from YouTube. But the reason why we set out to do this was, one, we wanted to network with people and meet new traders. And two, we wanted to put together something that if we started trading, it would just alleviate a lot of the bullshit that went on when we were learning. You know, try to shorten the learning curve, give you guys everything that we learned and have, you know, make that available for whoever's out there that wants to put in the time, that wants to put in the effort to do it. So week 4, heavy week, you know, once you get to this week, you should really be on the charts at the point where you are back testing and really getting ready to trade, getting ready to actually get into the market. And because of that, week 5 is just on psychology. So just talking about psychology, getting ready to get into the market, what you should be doing, everything like that. And then all the while, we will have webinars for you guys to hop on. I'll upload them as they come out. I'll upload this one to YouTube. It'll be free for you guys to review. We do have other free ones on here if you guys want to look at the other free ones too that we went through. And that's pretty much it. That's everything that's inside of the course. Inside of the Discord, you're going to get access to all the premium groups in here. So we'll just come in here real quick. All these in here, members, chat, member signals, the premium signals, the analysis.
It's everything.
FTMO, you're going to get access to everything. So that's everything that's included. Like Nick said, there's 2 spots left for this. This is just limited time offer right now. It's $2.99. It's normally $4.99. The main thing is the one-on-one. So if you guys want to get in on that, sign up for your one-on-one. Just hit us up after the session, and we're gonna have another session. Either like I don't know when. We'll talk to you guys in the chats about it, but we're gonna have another session. This one covered mainly market structure, but we went over a lot. You know, went over a lot of beneficial stuff in here. So next session, TBD.
Yep.
Yeah, next session coming soon. So appreciate you guys sticking on for the entire session. And just checking the chat. So my computer is struggling right now.
Yeah, it's because
I got so many things open.
Yeah, Zoom to YouTube channel.
Everyone's asking for 29. How much I have Signals? Signals is just $149 one-time fee. So if you guys are interested in Signals, if you guys are interested in anything, just hit me up. Even if you guys are in the free stuff and you just want to talk about what the free stuff includes as well, there is a free course and everything like that, just hit me up. So we'll talk to you guys on the next session. This concludes our free webinar. And yeah, thank you guys for sticking around.
Yep. Peace, guys. Have a good one. See you guys soon.